Good afternoon or good morning if you're in the States, and welcome to Carbon Tracker's first podcast. My name is Chris Moore, and this one will look at decarbonising gas networks. With a market cap of 15 billion euros, Snam, Italy's Italian company, is Europe's largest gas network with more than 37,000 kilometres and a market share in Europe of storage of around 17%. This podcast coincides with a note we published recently on Snam, along with its gas network peers, Italgas and Enagas. We have the details for this on the following slide. This is the fifth of our power and utility webinars. Today's agenda is especially relevant to last February's presentation, which looked at NG and Naturgy. I'd like to raise 5 issues we see facing gas network companies at Snam today. Next slide, please. So the agenda will look at 5 points. The first is, what is the future role of gas networks with increasing renewables and electrification? Second, are all emissions reduction targets from the companies up to date and credible? Third, can biomethane and hydrogen support network decarbonisation? Fourth, is gas regulation ready for lower gas demand? And does it do enough to support decarbonisation? And 5, are asset lives appropriate in view of lower gas demand and net zero by 2050? Next slide, please. So looking at gas networks and asking what's next, let's start off with gas-fired capacity and its future role. Even at very low load factors, CCGT, combined cycle gas turbines, will be needed as a reserve to power markets, mainly for capacity markets, but increasingly for system support services. Italy has no nuclear power, and Spain will end nuclear from 2027. Germany has announced it will authorize 10 gigawatts of new build CCGT on condition that this is converted to hydrogen by 2035 to 2040. And Siemens Energy claims that 50% of its turbines will be hydrogen ready by 2030 and 100% by 2032. However, all of this is theoretical if we don't have a hydrogen ready gas grid. Gas grids will still be needed in some form. Decarbonising heat in buildings is another issue here. This is something where we don't think that decarbonisation is going to happen very quickly. There is a substantial debate going on about hydrogen versus heat pumps and how that affects demand for each, but clearly it will take some time before heating buildings no longer needs gas grids. Third point is on industry. It's hard to comment on industrial demand for gas in the sense that it's very sensitive to gas prices, but the timing of when conversion goes over to hydrogen is quite hard to call, particularly for those hard to abate sectors. And finally, on the gas networks in the future, gas storage is more widely available and is in many cases cheaper than battery storage. And so there's a role to play there. But the key question, of course, is how available excess renewables are to support this. Next slide, please. So now we start to look at emissions and how these companies have performed against their targets. And the slide looks at Snam in particular and its emissions for scope 1 and 2 since 2018 and what the figures or what the targets look like as far as 2050. Snam's 2030 targets for scope 1 and 2 emissions are in line with the goal of limiting global warming to within 1.5 degrees of the Paris Agreement. Italgas and Enagas emissions targets are also Paris aligned, but all 3 companies still need these targets to be validated by SBTi. It's also the case that the reversing gas flows on lower gas imports from Russia and Ukraine has raised the base or shifted the base year for emissions targets for these companies. And Snam has just recently moved its base year from 2018 to 2022. So its new targets for 27 and 2030 are actually slightly higher than they were previously. And that reflects the new state of the world post-Ukraine. And presumably Enagas, which has a strategic plan due in June will probably follow suit. Looking elsewhere at the emission reductions targets, it's clear that it's harder to assess the credibility of these targets versus the track record because we've moved the base year. If we also look at this in a more specific sense for the sector, included in Scope 1 emissions are gas emissions, and gas emissions can be up to 80 times more damaging to the environment over 20 years than carbon dioxide. However, having said this, Snam actually has got a strong track record in gas emissions and has raised its targets for reducing gas emissions specifically. The other thing I'd like to talk about here in terms of emissions is Scope 3. Scope 3 emissions are more than 50% of total for these companies and are a major challenge in view of their size and here too the absence of a comparable track record. Last month, Snam set a first-time 2030 target for all Scope 3 emissions. But as with Enagas, there's almost no underlying track record that we can judge this against. And finally, just making that point one more time, Italgas too has a fairly partially comparable track record. Next slide, please. So the emissions targets we've just been talking about on my previous slide at Snam and Enagas largely hinge on two things: electrification of the compressor stations, and for Italgas on faster elimination of gas leaks. However, looking on the longer term, I think that biomethane and hydrogen are probably the more promising technologies available in terms of reducing emissions. Biomethane is certainly Snam's biggest energy transition capex item between 23 and 27. And biomethane is partly regulated in Italy, so that reduces investment risk. However, Italy's national target for 2030 of 7 BCM is only about 10% of current gas market volume. So there's a scale issue here. And additionally, we doubt whether biomethane has a sustainable cost advantage over gas, given how low gas prices are today, until biomethane achieves economies of scale and covers grid connection costs. If we look instead at hydrogen, Germany has very ambitious plans to spend up to 20 billion euros on a 10,000 kilometer network for 2032. And Germany is a key pull factor for building hydrogen infrastructure. And this is particularly true in Spain, which has major plans for a national hub in hydrogen. Germany's spending plans will need government bridge finance in terms of some guarantees to get this spending started. However, as we'll see, the European Parliament is due to announce a regulatory framework and subsidies for hydrogen next month. However, some substantial technical challenges remain for hydrogen. And we know that hydrogen transport will need at least 20% more pipeline capacity per unit of energy than gas. Snam and Enagas believe that 100% of their networks is hydrogen ready already, with 70% limited operating pressure loss and up to 10% blend at compressor stations. Italgas too has been looking at this and claims and expects its network to be hydrogen ready from 2028 and has already started installing hydrogen ready meters from 2025-26. However, going back to the questions about hydrogen one more time, the National Infrastructure Commission in the UK, which is an agency of Treasury, suggested last October that hydrogen may not be ready at scale for home heating and risk being an inefficient use of green energy. Next slide, please. So what are the company's CapEx plans in terms of hydrogen? Because these are where the really big numbers are. And I'd like to talk in a bit more detail in a minute about Enagas because their plans are most advanced in this sense. So coming back to Snam for a minute and short-term CapEx, about 100 million CapEx out of the 1.2 billion they've planned on energy transition through 27 will go on hydrogen. So it's a fairly modest spend in the medium term. And that's a lot less than Enagas, which is spending nearly 700 million on hydrogen projects by 2026. And Italgas has a similar figure for hydrogen-ready meters by 2029. So you can see how Snam is a bit more cautious in terms of how this money is going to be spent. In terms of the costs, the Snam expects to repurpose about 70% of its grids Enagas is talking about a range between 30 and 80%. And we look at how much the cost of repurposed pipes compared with new build. And our figures would suggest, from this goes back to November last year, so they're quite recent, figures where repurposed pipes are about 80% cheaper than new build. As we've talked about already with respect to regulation, the EU's Parliament's new regulatory framework is due for hydrogen with subsidies in March. However, looking elsewhere, Spain perhaps will have new remuneration for hydrogen from 2026. And in the case of Italy, we think that more should be done in terms of supporting upgrades to renewable gases. So how do companies fund this capex? Because we're talking about some fairly large numbers here. Enagas has plans to spend up to 4 billion euros from 2026 onwards on the hydrogen backbone. And Snam and Enagas both have projects of common interest, which have access to European funding from the Connecting Europe facility. Enagas talked about its capex and its funding plans at its webinar last week, and these were a key focus of the results. And this included the change in dividend policy. It sounds as if the remuneration for hydrogen will be regulated, including remuneration of work in progress. That's pretty important, and construction for pre-funding. But going back to the bigger picture, if we look at the capex plans for all three companies, that only partially align with the EU taxonomy rules. Snam is probably the best at 37%. But the other companies are less than that in terms of plans. Next slide, please. So looking at asset lives and regulation now, the forecasts are for gas demand to fall by between 6 and 16% in Italy by 2030, 2040, and up to as much as 40% in Spain by 2030. And we think that although Spanish gas demand is like to fall by these large figures, Enagas hopes to transport more hydrogen, mainly for export, than domestic gas by 2030. Nevertheless, we really need regulation to reflect this new world. This new world is quite different after Ukraine. Gas demand is lower, and in particular, the Italian regulation or criteria for determining and reviewing returns for gas networks was set before the invasion of Ukraine and the reversing gas flows, raising emissions in 2021. So Italian regulation is outdated and needs reviewing. It started to remunerate fully depreciated assets as an alternative to new build, and that's a start. And in the case of Snam, 30% of their network is fully depreciated by 2030. In the UK, the debate has moved on even further, where we can see that Ofgem just recently, I think last December, published its consultation for the RIIO-3 methodology for gas transmission and distribution from 2026 to 2035. And Ofgem is looking at pre-funding expected decommissioning costs and shortening network asset lives to accelerate shareholder return on capital. So the question really is are asset lives of 50 years at Snam and Italgas appropriate in this context with lower gas demand and net zero by 2050? And we think this question of asset lives is particularly relevant to bond investors and bankers who need to match the lending maturities with these asset lives. So we would expect to see shorter maturities going forward. And finally, in terms of the capex on hydrogen and biomethane, this may succeed in extending asset lives. And we think that if that's the case, then the most likely area for this to show first its effect will be Enagas, where hydrogen capex is going to be, as we've seen earlier, fairly substantial fairly quickly. Next slide, please. And so just one more slide on this before I finish up. And this is really looking at best practice. Italgas and Enagas use an internal carbon price to support their decision-making processes. Italgas assigns an economic value to emissions reduction and evaluates its impact, both in terms of avoided carbon dioxide, but also economic value, assuming that carbon has a cost equal to the cost of carbon emissions avoided, and look at that against capex and the cost of the project. This supports the decision-making process, like purchasing electricity from renewable sources, and Enagas does something similar. We think Snam should follow suit and disclose. One more area of best practice is that in its recent sustainability-linked bonds, Snam has disclosed the level of threshold of gas emission reduction, and carbon emission reduction to link its emissions with the cost of issuing new debt. And we think Italgas and Enagas should follow suit. And my last slide is really to leave 5 questions, if you like, for engaging with Snam. And this is largely relevant for the other 2 companies as well. The first question is, does Snam have potential to accelerate Scope 3 emissions reduction? Second, what kind of regulatory support do these companies need in order to reach final investment decision for CapEx on hydrogen, hydrogen network, hydrogen storage, and CCUS? Third question, how much CapEx flexibility do these companies have as regulation evolves, because these are long planning times that are needed? Fourth question, does regulation need to do more to reflect expected lower gas demand? And last but not least, are asset lives appropriate in view of lower gas demand and net zero by 2050? Thank you.